By the end of this video, you will see 4 different stocks that you need to invest in today, and I may even throw a 5th one in there. High risk, high reward. Let's see if I make that commitment at the end. How's it going? Michael EJ here, helping you reach your financial goals and dreams by becoming the best investor that you can be. If you're new to the channel, how's it going? On this channel, mainly focus on the stock market, bring you different tips and tricks that differentiate yourselves from anything else you will hear. Anything else you hear on YouTube, anything else, just in period. This is the channel where you need to be different. That's the only way you're going to beat the market, in my opinion. So if you want some differentiated advice, make sure to subscribe, hit that like button, and let's get started. So for all those who do not know about me, I love mid-cap stocks, or maybe I would say small, large cap stocks. I mean, to me, they're always overlooked, underappreciated, and big gains can be had, especially since a lot of these businesses are differentiated in their own right. So let's start with one, Arista Networks, or ANET, A-N-E-T, that's the ticker. About $17 billion market cap. Now, Arista Networks is in the cloud computing support business. They actually support those people who actually provide the cloud. I mean, they're kind of directly connected to that industry. Different solutions that integrate well with all of the different products. For example, a lot of the solutions with Microsoft, a lot of the solutions with Intel, just all around just in general, they do a good job supporting it all. I mean, that's kind of their thing. And this kind of cloud computing support kind of industry is new, it's up and coming, it's growing fast, and they have been recognized by Gartner as the leader. Love looking at leaders. If you're leading an industry, I'm all about it, especially if it's a fast growing industry. Another indicator that they're the leader and that's growing fast and things are going well, they are investing a lot. And I mean, usually technology companies are capital light. Unless you make some adjustments to the financial statements, you'll see that, hey, they're making a lot of investments in R&D for proprietary technology and different products to sell later down the road, as well as in sales and marketing. They're investing a lot in their sales force, and it's turning into high cash flow generation. Why be in business if you cannot generate cash? So with all that said, I mean, a lot of the rise has come because they're part of the cloud computing space in that industry, and that industry in general has done very well over the past year. So although they've done well, I still think the market isn't fully appreciating their growth opportunities. I see 40–50% upside in the upcoming year. And I might not sound like a lot, but it is, especially if you have a good feeling that it's more probable than not that's going to happen. Okay, the second pick. Next on the list is the Huntsman Group, or ticker HUN. About an $8 billion market cap. Now, they're a little bit different. To me, they're more of a defensive pick because they are an organic chemical product manufacturer. That's a mouthful, and what they're manufacturing applies to a lot of different industries. I mean, aerospace, power generation, medical, electronics. I'm still not even sure how it all comes together, but what I do know is that they sell specialty products in the defensive sector. If the market tanks, if the economy tanks, it doesn't matter. They are selling specialty products, things that you need if you operate in any space and you rely on Huntsman for any product. There's kind of specialty. So none of their products they sell, anything that they're manufacturing isn't commoditized. It's all going only through Huntsman, which is a really good thing. And I also like management's recent focus on increasing the quality of the company. If you actually look at the financials, you'll be surprised that sales aren't as hot. I mean, they're not just popping off the charts. I mean, they're growing rather slowly, but they're in a niche industry which they have control of, and they're increasing profitability while decreasing debt. You know what that means? More cash for the shareholders. Maybe a dividend payout in the future, maybe some share repurchasing, and with a higher quality company, when things go awry in the markets, there's usually a flight to quality. Given that they're already in the defensive sector, the material sector, that usually does well anyway during market crashes, this is just another name to add to the book. And I see 50, maybe even 70% upside with this company. I mean, there's a lot of misunderstanding here. Once again, people usually just don't understand how intangibles play a role in growth opportunities within a company. And you're gonna always see that as a theme in my investment approach. All right, next up, we have Coherent Inc., or ticker COHR. Market cap's around 7 billion. They are in the laser-based products and solutions. They're in the laser business. Now, what are they doing with those lasers? A lot. Apparently, lasers are used a lot in smartphones, in wearable technology, using your mobile devices, I already mentioned. Also, a lot of metal cutting, drilling, kind of used in scientific research and research involving the government. That can be twofold, that can be good and bad. But a lot of solutions pertaining to lasers and lasers-based technology. Now, why do I like Coherent? First and foremost, they actually aren't depending on the US economy at all. So it's another kind of hidden way to protect yourself against any fall in the United States. One thing you have to realize is that there's a lot of growth happening in economies outside of the United States. In a lot of ways, the US is kind of stagnant in terms of growth. So having many more options out there across the globe is very good. It's a very good sign that can lead to future growth happening. Let's also not forget that they actually just had an acquisition early part of last year that just compounded their competitive advantage in the laser-based product space. And also, one thing I really like, they have tons, and I mean tons of intellectual property, mainly in patents. They have over 700 patents with 200 more pending. That's a lot of intangible horsepower to work with. And I think that's the main reason why they're still somewhat misunderstood by the market. Believe it or not, this stock doubled for 2017, and I see another 40–60% to go. There's plenty of room to run, and it can continue to run if they just continue to beat results and the market doesn't catch up to how to look at this company. All right, lastly on the list, how can you go without Facebook? Now, it's a huge company. It kind of just dwarfs all I just said about mid-caps, but come on now. If you actually take a look at Facebook, you see that they are an amazing company doing everything right, investing in the right places, continue to grow at a high clip. One of the reasons is that they are growing a lot outside of the United States. Just mentioned before with Huntsman Corp and with all the other names, that's kind of important to me. How are you growing outside of the United States, where the growth is really at? And Facebook, of course, is taking advantage of it. Let's also not forget, Facebook is a very high quality company. There's like no debt, very high returns on capital. 30–40%. It's ridiculous once you make a couple adjustments to their financial statements. It is off the charts what Facebook's able to do. No debt. They're a leader. They're a leader in social media. They kind of own it. Most watch time, most minutes spent on one platform, it's Facebook. It's easy to just lose time looking on Facebook or Instagram or hop on WhatsApp. They're kind of owning it all. Combined with all of that and some misunderstandings about the market, but believe it or not, even with all these things involved, and Facebook is a very highly owned stock, by the way. A lot of hedge funds, a lot of institutional investors, they own Facebook. Even with that, I still think the market is not understanding the true opportunity out there with Facebook. There's still a lot of room this stock can run. I see 50–70% upside. And that's going to happen either the market goes up or even the market goes down. It's going to be really good protection because very high quality. Remember, when the market crashes, if it happens, there's a flight to quality. And this is one of the highest quality stocks out there. Now, my last pick for you all today, I actually leave with a question mark. And that's Micron, one of the hottest, most talked about, kind of controversial stocks out there. For all of those that do not know, Micron, $51 billion market cap, ticker MU. They're in the memory and storage solutions space. Kind of known as an industry leader there. The thing about it though is, when you look at the fundamentals, look at how they're generating cash, things are going really well. But the stock has really isn't been driven by fundamentals. It's being driven by connections to other industries and little other parts where there's a lot of speculation in there. Some of that includes, first of all, since they're like a main contributor to Apple products, they're mainly connected to Apple. So if Apple's doing well, Micron's doing well, and vice versa. There's also some connections to machine learning, autonomous vehicles, the cloud. I mean, these are all different reasons why the stock has gone through such an up and down over the years. I mean, it's a great company. Things are happening, but hey, I mean, there's a lot of question marks. Where's the value coming from? What's driving the value? The fundamentals are great, but I don't think that's what's driving the stock price. On top of that, questionable company direction. Where's the company going to go from here with their products? How they're going to manage their capital base? There's a lot of investors out there that have differing opinions on how Micron should go about doing business going forward as a company. Should they continue to lower their debt loads, or should they try to invest more in the company, reward shareholders, all these sorts? So all decisions that we're still not 100% clear on what Micron's going to do. Now, in my opinion, Micron has a chance to double. I mean, they can double in stock price. I mean, this could become a $100 billion company, or they can fall 20 or 30%. I mean, it's one or the other. If you're going to invest in Micron, just put a small portion in there and prepare for a rocky ride. And that's what I have for you all today. Guys, always look for something different, differentiated views. Look at the markets, look at companies different, look at what's going to lead to growth long term, and how much quality is it in this company. This is the basis of how I look at companies, and the basis how you should too. Michael EJ here. Don't forget to like and subscribe, and I'll see you in the next video. Peace.